Hi, Tony Daly, and in this video I want to show you a couple of things. So we'll try to get a couple of things done in one video. The first thing I want to show you is stock I'm looking at that I'm very used to playing, and it's Goldman Sachs, who is announcing on Thursday. So what I'm watching for is I'm looking at this very well defined price channel that Goldman has been um, going in since about July. And as you can see, we're pretty well defined between 153 and 170 as a channel. We're currently, if you see these moving averages, this is the 21 and the 50 period moving average, and you see they're just kind of crossing each other. So we're definitely trendless, but we are trading within a range, so you can govern yourself accordingly. And um, once earning, depending on how you play earnings and the volatility, I mean, I would be looking at 170 and 150 on the downside as my wide strikes and maybe build a trade around that. You can see the 200 period moving average. We bounced right off the 200 period moving average. So that's also significant support. So we have the bottom of the channel line. We have the 200 period moving average, so we got pretty good support to the bottom, and you could see we have a couple of touches up here at top around the 170 line, which goes all the way back to June. So jump in and take a look at the quick look at the weekly chart, and we could see here's our price channel, still very well defined. And you could see when we spent a lot of time below the 200 moving average, but once we crossed it, the 200 moving average went from resistance to support. So you can see here we held, and then we've entered this price channel, and it looks like we've got to respect this price channel until it resolves itself to the inside or outside. But there are many neutral strategies that will use these as wider strikes. I will wait until Wednesday. I believe they're announcing on Thursday, but I'm going to wait until Wednesday before I take a direction one way or the other. You also see the coiled stochastics down here, which are pretty much not confirming overbought or oversold, but rather pretty aimless. And right here, this is also another warning here when you see the momentum indicators not basically taking a position, and you see there is really no histogram here at all. So that's it for Goldman. I want to show you now, I want to show you a scan that I take, a pre-earnings scan. And I love playing in front of earnings because, like I said, I think we have our best opportunities around earnings because of the implied market maker moves and the potential for trading opportunities because of imbalances or errors in the estimation of the IV percentile. Now, many times they will be spot on, but if you recall, those of you that were at my meeting the other day, I showed you that 83% of the time the market maker move was in excess of the actual move. So given that, we can selectively look and potentially build some trades around putting those that fact in our arsenal. So anyway, here's what I look at. I look at earnings anytime in the next 2 bars. So basically, I'm just looking at 2 days worth of trade. Very important key right here. IV percentile is in the upper range. It's got to be greater than 50%. I don't care if it's 1,000% up here, but it's got to be greater than 50%. Remember, we're premium sellers and we're looking for rich IV. Volatility percentile, which is on the low side, has shown statistically to give us a lot more losers than winners, because to get the adequate premium, we've got to collapse our strikes. And our other filter is I'd like volume to be at least 750,000 shares, an average over the past 5 bars, so we know we have adequate liquidity. So my scan came up with 4 underlyings: Yahoo, Intel, Coca-Cola, and Johnson & Johnson. That number will expand as we get further in, and just to show you, if I go out 5 bars and I go to the next 5 days, we've got quite a few more. Now, further, remember, I am not playing because these are earnings plays. I want only stocks that have weekly options trades because I want that theta. This is a strict theta play. If I'm going to go short volatility and I'm going wider than the market maker move, I want to ensure I'm just working with weeklies. And even more important than weeklies, I would like to work with penny increment options so I could really mitigate my risk on both sides. So I mitigate my risk, and I'm also maximizing because I know that 83% of the time the implied move is going to be greater than the actual move based on past statistics. Now anything could happen, but just remember we're always looking for an edge. So so that's what we've got going on right now. And back to here. Again, here's my scan. Earnings in 2 days. IV percentile, very important. Greater than 50%. Greater than 750,000 shares. And I really just want to deal with weeklies. Now, a lot of indexes don't have earnings, so you could play those anytime. So separately, you could look at indexes, and there are several indexes. Again, just make sure that the IV percentile is greater than 50. Okay, so there was one other thing that I was asked to look at, and those are the rainbows. Okay, this is a trading screen that I really use a lot, and what this is I call this my rainbow moving average, and it's a variation of the guppy trade. For those of you who don't know what the guppy trade is I think you could find it on Wikipedia. But anyway, here we have a stock like Goldman, and I'm looking at the daily chart right here, and basically there's few rules that you want to look at over here is that if you can't see space in between these moving averages, that means we're pretty much not in a trend. And this is a trend following or a trend direction system. Look at the 1 hour chart. Look how we're in a defined downtrend. You've got plenty of daylight visible between the moving averages. And then on a trend change, you really want a confirmation of that trend change. But I use a combination of the daily and the hourly. I use the hourly for entries, and this is the 20-period exponential moving average, which a lot of people use for re-entries and profit taking and exits. So anywhere between here and here is a re-entry point. When a candle goes into the moving averages, that is basically my setup bar, and I am looking for a trend continuation outside of that bar. Now, this was a downtrend, and if it had come in here, I would be looking for it on a downtrend continuance. If it breaks through and closes outside, we have a very good chance for a trend reversal, and now I would be looking for trades on the upside, but I always wait for a pullback into the rainbow moving average. So let's take a look at Amazon. So here we got I just picked Amazon, and basically here's what you got. We have a daily, which here is trend, and then breaking in here, no trend. And then as we establish a new trend to the upside, notice the pullback to the 20. We've got a potential re-entry. And then again in here we went inside, and now I'm looking for the next candle to trade outside, which would be like a pullback trend continuation. If the next bar breaks below it, we have a potential trade reversal that negates the setup bar. And then we start all over again. So here's a bar. Remember, we're still in an uptrend. Here's a bar that finished inside. The next trade broke outside. As soon as it clears the high of the setup bar, we have a potential entry. And we could refine that entry on the hourly chart. Here we have a little flag pattern. Pull back in. Notice it did not close outside, and we have a valid long setup over here on the 1 hour chart. So you could also look at your momentum, and then you have your stochastics, which I always use. But I use stochastics a lot to look for divergences. So I know there was a lot on this video, and you might have to look at it a few times. If you have any questions, feel free to send them to me. You have my email address is tdally@bellsouth.net, and I hope you enjoyed it. Hope it helps. and I'll see you soon.